Good morning. Let's check out your top 5 stocks to watch out for in today's trading session. Well, we begin then with engineering conglomerate L&T that's in focus. It's on Credit Suisse's brokerage radar. They've maintained an outperform rating on the stock with the target price at 1150 rupees per share. Credit Suisse believes that they retain an outperform on the back of the sector as well as the geography diversification. In fact, they believe that the subsidiary valuation is up, diluting the EPC and driving higher holdco discount. They believe defense is small, but it could be a strong driving factor for the ESG resistance, and the stock has upside even if they build in a 50% discount for the holdco. The tender activity data as well, according to Credit Suisse, is resilient and has recovered, and they believe that the downside risks for L&T are the weak cycle and the project issues. Moving on then, let's focus in on Cipla as well. That's a newsmaker in trade today as they've got some approvals kicking in. In fact, what we understand is that Cipla has got an approval coming in. This is for a drug, the final approval for the generic version of Biogen Tedfidera, and this is going to come in as quite a positive for the company. And this is just on the back of, in the last 3 days, the company got the US FDA approval for the dimethyl fumarate DR capsules as well. So on the back of that, these two new approvals are going to come in as a positive. Moving on then, you got BPCL as well, that's in focus today, and the company may be selling part of their Treasury shares. This is going to be via block deals, and we understand that the decision on the sale of the Treasury stocks is actually going to be taken by the 15th of October. Keep an eye out on Shalby Hospitals today. They plan to reduce the promoters' holding from the current 79.45% to 75% and increase the public shareholding to at least 25%. Shalby Hospitals is also going to raise about 117 crore rupees. This is going to be via bonds, QIP, rights issue and preferential shares. So a number of routes is what they plan to explore. And finally, watch out for the insurance stocks. So the likes of HDFC, AMC, ICICI Pru, SBI Life, all should be on your radar, as JPMorgan says they prefer life over non-life insurance stocks given the potential for a 15 to 20% VNB growth. They believe that ICICI Pru is the top pick with 2 times FY21 price to EV. SBI Life at 2.6 times is likely to perform in the second half in line, and HDFC Life trading at about 4.7 times is leading the APE recovery. They advise though that it's time to wait for ICICI Lombard's valuation to moderate to turn positive.